This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. OPEC Plus is set to stick this week to its monthly modest oil output increases despite seeing tighter global markets, 5 OPEC Plus sources said on Wednesday as the group fast approaches its maximum production capacity. Oil prices rallied above $124 per barrel this week following new EU sanctions against Russia over its invasion of Ukraine and China's recovery from the latest COVID-19 lockdown. The world's most industrialized countries, known as G7, called again this week on OPEC to help ease a global energy crunch that worsened as a result of Western sanctions imposed on Russia.
Oil prices firmed on Wednesday after European Union leaders agreed to a partial and phased ban on Russian oil and as China ended its COVID-19 lockdown in Shanghai. Brent crude was up $2.40, or 2.1%, at $118 a barrel by 13:57 GMT. U.S. West Texas Intermediate, WTI, crude rose $2.54, or 2.2%, to $117.21. Both benchmarks registered gains over May, marking the sixth straight month of rising prices. The mood on the oil market is seemingly turning ever more bullish, said Julius Baer analyst Norbert Rucker.
Moving on to the top news in the energy sector.
Asian spot liquefied natural gas, LNG, prices were up this week on continued demand growth from Japan, Korea and India as large utilities sought to replenish stocks. The increased competition has accordingly narrowed the spread with European gas prices on the Dutch TTF hub, where prices went down after concerns over further Russian gas cuts eased. The average LNG price for July delivery into Northeast Asia LNG was estimated at $24.75 per metric million British thermal units, MMBTU, up $1.35 or 5.8% from the previous week, industry sources said.
There's a split emerging in India's refining sector as private refiners tap cheap Russian crude and boost profits from exports just as domestically focused state refiners get squeezed by high oil costs and government-capped domestic fuel prices. While many Western buyers are avoiding Russian crude in response to its invasion of Ukraine, Indian private refiners such as Reliance and Nayara have been among the biggest buyers this year of discounted Russian supplies. They are reaping major profits by reducing domestic sales and aggressively boost fuel exports, including to buyers in Europe, which is now boycotting imports of Russian energy.
Next, we have the top news in metal markets.
Global aluminium producers have offered Japanese buyers premiums of $172 to $177 a ton for July to September primary metal shipments, which would be between unchanged and 2.9% higher compared with the current quarter, 4 sources directly involved in quarterly pricing talks said on Wednesday. Japan is Asia's biggest importer of the metal. The premiums for primary metal shipments it agrees to pay each quarter over the London Metal Exchange, LME, cash price set the benchmark for the region. For the April to June quarter, Japanese buyers agreed to pay a premium of $172 per ton, down 2.8% from the prior quarter.
China's army of metal processors and traders has flipped from buyers to sellers amid a sharp downshift in economic activity in the world's top manufacturer, heralding a potential warning sign for steel, aluminium and other key industrial commodities. Chinese buyers drove the global surge in metals prices from mid-2020 through end 2021 as they scoured the world for ores and metals to feed its mammoth industrial engine and build inventories in anticipation of further price rises. That order flow has reversed since March, as recurring outbreaks of COVID-19 have triggered extended factory and store shutdowns, choking purchases of metals-intensive products from cars to appliances, and pressuring prices of manufacturing inputs. We will now look at the top news in the agricultural sector. India has slashed the base import prices of crude and refined palm oil, while raising the price of crude soyoil, the government said in a statement late on Tuesday. The government revises base import prices of edible oils, gold and silver every fortnight, and the prices are used to calculate the amount of tax an importer needs to pay. India, the world's biggest edible oils importer, last week allowed duty-free imports 2 million tons of soyoil.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.